I call myself often an angel investor because that feels like the default thing to say as an individual or a solo person developing. But if you actually look at my investment activity, that was probably true in the beginning, but it's not necessarily true anymore. And there's now, just because of just kind of the explosion of emerging managers, the explosion of platforms, the ability for for angels to put together checks like things like syndicates, that there's now an opportunity for someone who might have traditionally been pigeonholed to being just an angel investor to truly being an overall venture capital investor. So for context, when I first started, it was mostly seed, maybe a little bit of pre-seed, some Series A stuff, and then I'm sure as you get bombarded with my syndicate emails, you've seen I did last week, I did the Series H for Databricks, the Series C for Picasso, and a number of later stage deals as well. And so I think of myself as just a venture investor. Still do a lot of early stuff, and there's still a certain thrill that comes with the discovery and a different set of returns and a different set of framework, one stage versus the other. But like I said, I think because of the explosion and I won't say access has been fully democratized. It's definitely a work in progress. And then particularly as we think about other communities participating in this asset class. But there's certainly more opportunity where, folks aren't just going on Sand Hill Road and talking to the same handful of funds. There's so many ways to get capital. Capital is being commoditized. So that creates a lot of opportunities for disruptors and folks like myself to sneak into some of these rounds.